Hey guys, with all the current volatility in the market, how are we supposed to know whether a stock is overvalued or undervalued? In this video, I'll be showing you one metric that you should look at to help you determine this yourself. Also, at the very end, I'll show you two resources that you can look to help you with this determination. Hey guys, welcome to my channel. If you're new here, I'm Romel, and on this channel we talk about all things related to finance, investing, and building wealth. We discuss mindsets, strategies, techniques, and resources to help you in your journey to build wealth. If you haven't yet, please like, comment, and subscribe. Your support really goes a long way to helping this channel grow and provide quality content every week. So what is this one metric that I'm talking about to help you determine whether a stock is overvalued or undervalued? That metric is called price to earnings ratio, or PE ratio. PE ratio is a metric or ratio that measures the current share price of a company against its earnings per share. Alright, I know that was really confusing with a lot of words that you may not understand, but stick around. I'll go over each of those in detail and I'll give you some examples to put this into perspective. Why PE ratio? Why does this matter? Investors have used this to help determine whether a stock is overvalued or undervalued. Generally, a higher PE ratio means a stock is overvalued, and a lower PE ratio means that the stock may be undervalued. However, there's a big exception to this. Higher PE ratios could also signify that there's going to be a lot of future growth for a company. This means that investors are very bullish on the long-term horizon of a current company. If you don't know what the term bullish is, then take a look at one of my other videos. I discuss the term bullish and bearish, and I give some examples to help you remember what these two things are. Now that we know what PE ratio is, how do we calculate it? The formula for PE ratio is market value per share over earnings per share. The market value is the current stock price. This is the price that comes up when you search for a certain stock. Let's go into more detail of PE ratios. Take a look at this example to help you understand how PE ratios work. Company A has a market value of $100. When we did our research, we've seen that the earnings per share for Company A is $10. The PE ratio is 10. Company B, on the other hand, has a market value of $200. Earnings per share is also $10. However, the price to earnings ratio is 20. A higher PE ratio could signify that the company stock is overvalued, whereas a lower PE ratio could mean that it's undervalued. In this example, we see that company B is overvalued because its PE ratio is 20, where company A is only at 10. However, like we mentioned before, higher PE ratios aren't always an indicator of overvalued companies. In this PE ratio exception, I'll show you what I mean by that. In year 1, company A has a market value of $100. Its EPS, or earnings per share, in year 1 is $10. The PE ratio is 10. However, in year 2, the market value is still $100. However, they make more earnings per share. It's increased from $10 to $20. The new PE ratio is 5. As you can see, if a company grows, then the PE ratio may change. You'll see some high PE ratios, and this could signify that a lot of investors are bullish. However, you have to do your own research to see what you think for yourself. Again, you have to be very cautious with PE ratios. Because there's a general rule of thumb where a higher PE ratio is bad and a lower one is good, it's not always the case. PE ratios are a snapshot, or they look backwards. What they may not account for is future growth. I'll show you two places where you can find the PE ratio without having to do all those calculations yourself. The first resource is Yahoo Finance. In this example, I pulled up the Apple stock. As you can see, highlighted in yellow, we have a PE ratio of 27.62. Also on Yahoo Finance, you're able to see the earnings per share. The acronym at the end of it, TTM, means trailing 12 months. This means it's taking a look at the earnings per share over the past 12 months. The second place that I'm going to show you is through Robinhood. When you search up a stock, you'll see the price to earnings ratio in the description of the stock. You should check the brokerages that you use to do your trades. They most likely have a price to earnings ratio. Alright guys, that's all we have for this video. If you got some value out of it, please smash the like button down below. That helps to indicate to the YouTube algorithm that you like the content we produce. If you'd like to connect with me on other social media platforms such as Instagram, Facebook, or Twitter, I'll also leave links in the description down below to the usernames that I use. Let me know what you guys think of PE ratios. Are there any stocks that you're looking at with high PE ratios that you're very bullish about? I'd be interested to see what you guys have in mind. Thanks again for watching, guys, and I'll see you on the next one.